All right, so hi again, everybody. Thank you for waiting. Just wanted to give a few minutes before we started the call, just to let everybody log in. Yeah, thanks for being here. Basically, we prepared a couple slides. I think we'll go through. We'll start the discussion with those just to give an overview of kind of what we're going to talk about, and then basically follow up with some questions, and then we'll also have some questions from you guys. So, without further ado, okay, well, perfect. Great. So yeah, there you go. So I can I can let people in while you share the slides. So yeah, crowd lending, investing in renewable energy communities. That's the topic today. Talk a little bit about essentially the partnership we have between Cleanwatts and Goparity, and really how it works, why it's important, and all those details around it. So I think for a start, maybe I can have you and go into it, Manuel. Basically, kind of short intro. What exactly is Goparity? What do you guys do? Let's start there.
Thanks, Aron. So yes, Goparity is a European crowd lending platform, and we are positioned as an impact and finance and investment app. We accept investors from basically all over the world, and we are putting up for investment projects focused on sustainability and impact. And so how this works basically is that anyone can join as an investor starting at €5. They have no costs to use our app, and they can basically put forward their money, choose promoters, so organizations and startups, etc., where they want to lend money. So they lend that money to the promoter, and then under a defined repayment contract, a loan contract, that entity will repay the principal with a specific interest, such as a bank would do it. So in a way, it's peer-to-peer. It means investors are lending directly to the companies asking for the money, although all the process is easily managed by the platform and no one has to do any specific tasks. And we, as a company, we get our money from the companies getting the loans. That's why investing is completely free. And the objective on this is also that we focus on sustainability, as I mentioned, being that over 40% of our business is actually sustainable energy, where Cleanwatts is one of our major partners. The approach that Cleanwatts has done as one of the first stakeholders and entities in Portugal to approach the energy community market as the first comer has been very relevant for us, and Aron will mention that in more detail. But they are one of the good examples of how we have moved and proposed loans that support these investments in community energy, and the maturity that these investments has is aligned with the payback periods of the installations. So in that sense, to provide these loans with the right format allows for the sustainability of the business, and at the same time, lenders are involved in this part. Maybe, Aron, if you want to mention a bit here, or I can say it. Basically, together what we've done is financed at this moment 15 individual communities. Cleanwatts has a very ambitious project called 100 Aldeias, 100 villages, where they are setting up energy communities around Portugal. And for these initiatives, we have raised over €1 million for these communities. As we started already collaborating and financing Cleanwatts over a year ago, the average return of the loans is at this moment 5.42% per year, because of course interest rates were lower a few years ago. So that's what today the money would be slightly more expensive, which is actually good for investors. And still, it's on level, on par with standard banking practices. And from our platform, which has over 47,000 users, 3,000 of them, over 3,000 of them, have lent money to the Cleanwatts projects. Aron, you wanna pop in here to explain an example of such community?
Sure, thanks. Yeah, so as you mentioned, we have 15 communities that you guys helped us fund, and we just wanted to point out one in particular, just as an example, basically. So this is in Figueiro dos Vinhos in Leiria. Well, I tried. Um, Leiria, okay. And it's bomberos, so it's firefighters basically. And so the core of the energy community is on the roof of the bomberos, and basically that's shared with the local community. So the equivalent number of homes that is being supported is 300, or sorry, 300 people. Of course, it's not 100% of the energy, that you can see. It's only 56 panels, so it's not 100% of the energy from all those 300 people, but rather a portion of the energy, especially during the day, during sunny days. So it's helping them get discounted energy, um, for part of their consumption. There's still a grid connection for all of them. So yeah, I think the important thing here to point out is, as we see that it's firefighters, that it's really it's not just like cheaper renewable energy, I think is great, but it's also it kind of, if you just think about it in terms of the cost and the clean energy, you're kind of missing out on the overall community aspect of it. So so imagine that we're also providing essentially a community service here, where now this bomberos, they're able to get a little bit of extra income from the sale of clean renewable energy that's benefiting everybody in the community, but also it's benefiting them in a way that they have more access to resources and so forth to better serve the community. So it's really such a kind of win-win-win across all these different components of climate, energy poverty, and making it more affordable for people, but also for just better community. So that's really overview of this, and I think, yeah, that's the last slide. So I think we can stop sharing, and then basically maybe just get into some questions about Goparity and your platform, because I'm really curious about more about like how it works, because it's been a really powerful tool for us. I mean, €1 million, obviously makes a big difference in terms of communities. Of course, we hope that it's going to grow over time. So, I started out with this community, Figueira dos Vinhos, but maybe do you have another project in particular that you're really proud of, that you guys were able to finance? Doesn't have to be Cleanwatts or even energy
Yeah,
community, but maybe
yeah.
mention something.
Well, let's say it's been an interesting. So the Goparity exists for 7 years, and at this moment, what we've been doing is, as we gather a larger and larger community. Now we have a European license since the end of last year. We can go up to 5 million euros per company per year, and that's basically where we want to reach. So gather enough investors that anyone who has a sustainable project, because that's what we do, right? We only fund projects that advance the sustainable development goals of the United Nations, where clearly renewable energy, but not only renewable energy, but sustainable energy investments. So, and that goes to another discussion, which I believe it's the role of energy communities as the enablers of self-consumption, um, together with batteries, electric mobility, electrification, and all that. But to say that we are gathering more and more investors and let's say uh, give them financial literacy in the sense that we have very different maturities of projects. So people can lend at 6 months, 1 year, 4 years. But when we talk about energy communities, we need to look at longer maturities because of the paybacks of these projects. 6 years, 8 years, even 10. And I think that's where we're doing a lot of work, which is showing people that these long-term investments, in one hand, they are solid. So it's a safe way to put money, which has real warranties, such as the solar panels and the communities they serve. But at the same time, because we have a secondary market, if at any moment you need to have liquidity on your portfolio, meaning you need to cash back the money you put in, you can just sell your loan to someone else. And I think this has been a major enabler to allow for citizen investors like you and me to put a few €100 on long-term projects, even if I know that if I have an urgent need to get my money back, I will for sure find someone who will buy my position on a secondary market. And that's actually what happens in 99% of the cases in Goparity. And in terms of projects we are proud of is what you say. We are trying to find more and more investors who are willing to invest long term. And this enables the true relevant projects. So for sure, Cleanwatts was a landmark because we were starting to do projects at 6 and 8 years maturity. And just yesterday, we have broken a new milestone, which is actually an energy community in Catalonia, and we're doing, as we speak, the biggest ticket ever, which we aim now to do €800,000 in one single operation, which I would believe wouldn't be possible 2 years ago. When you guys partnered up with us and we were saying, well, let's try 50,000, 100,000. But I think nowadays citizens are more and more aware of the value of these kind of operations, and they are willing to support them. So we're really proud of our investors in that sense, that they support projects like the ones Cleanwatts is developing.
Awesome. Yeah, thank you. That's pretty impressive. So speaking of which, you said you've been in business for around 7 years. Now you're moving into bigger and bigger deals. What have been the biggest challenges that you guys have had to, basically scaling your operation?
Yeah, I would say we reject around 90% of the requests we receive for loans. And that's really a major point because we have to be very thorough on what is asked and what kind of impact these projects are doing, but also how solid are they. And curiously, there's a metric for this in the industry called the non-performing loan. So basically, loans that are not paying what they are supposed to. And in the crowd lending sector, we're actually one of the best with the lowest NPL in the market. And we've been studying this and trying to understand why. And mostly is because we are funding real assets, which, as you saw from the presentation, 41% of our business is mostly solar panels. So what we see is the tendency for these projects not to go into arrears, not to pay what they're, it's much smaller. So in a sense that we're talking about crowd lending, which has, of course, risk. People are investing directly into projects, and those projects can have problems. Those companies can have cash flow problems, etc. But generically speaking, there is a real warranty there, which is the equipment being financed, for example. And so under that aspect, our major challenge is to find actual good projects that we want to present to our community. Because at the end of the day, our assets, our best asset is our reputation. And if Goparity would put a lot of projects that could actually pay high interest rates, but then they would not pay their investors back, we would be out of business very soon. And there are a lot of stories of the industry of platforms offering 10%, 12% interest rate, and then just going bust after a few months or a few years. So we go slow and steady. That's been an obstacle of our growth, but at the same time, it shows that the growth, the projects that we put on our platform are much more solid. And that's the big thing. And also, as I mentioned, the other big challenge was to help people understand that there's no problem in investing long term projects with 8-10 years maturities, because they are solid, and at the same time, you can get your money back in the secondary market at any moment.
Cool. That's really interesting. And this last fact, actually, I wasn't even aware of for you guys. So yeah, thank you for pointing that out. Um, maybe as you mentioned, kind of risk and how you guys are managing that. Can you talk about briefly, like, have you guys? I'm sure you must have had at least a few failed projects. And kind of other than what you mentioned, can you mention one in particular, or in general, and basically, what are the lessons learned from them?
Yeah, for sure. We do what we call a triple due diligence. So we will look at the accounts of the companies, and that's a standard banking methodology based on ratios of debt, own capital, things like that. That will give us a notion of the financial risk of the project. Then we do a technical due diligence, which will look at, not only if we're talking about a solar project, it will look at payback, revenues, etc., to see if it makes sense. Also, costs that are being asked for, and then we do the impact due diligence. What we've been seeing is, of course, there are some projects that fail. I think our NPL is around 3%, but most of the projects that we have seen difficulties, they are examples of industry that are vulnerable to, well, the war on Ukraine caused a lot of fluctuation in supply chains, and also the current economic, how do you call it? The economic performance of Germany, which is very slow at the moment, and a lot of Portuguese industries are suppliers of items to Germany. That we have seen that some clients of ours who have asked money to put solar panels, then they don't have as much business as they used to, and they have cash flow problems. But otherwise, in terms of the generic analysis to projects, I would say 99% of them are successful, and they are able to sometimes we can restructure them, so give them more time to pay back their responsibilities, things like that, and that's worked fine so far.
Okay, cool. That's super positive. 99% is pretty good. That seems very like a very secure investment. All right. Maybe switching it up a little bit, what technologies do you think will impact how you guys do business in the future, whether like, I don't know, for crowd lending, or rather maybe for the kinds of technologies that you want to be like that are promising to invest in
Cool.
that
Yeah,
still fit,
we see a lot of stuff, and what I think is, as we see the learning curves and the prices of specific equipments getting more and more accessible, like Goparity as a company was built on the market opportunity of solar panels becoming much more cheap in 2016. And so we've seen these kind of trends, and more, for example, even before the war on Ukraine, with the gas and energy crisis in the summer of 2021, 2022, that's where we saw a lot of a peak of solar installation, for example, because companies wanted to protect themselves from the spot market, which at that time had prices such as 300 euros per megawatt hour, which now appears to be a distant mirage, but we never know when those things can come back. And so looking at this kind of thing, we would see solar panels, but then we started to see the way they are installed, which are more accessible. For example, car parks, or substitution of roofs together with solar panels, sometimes even to solve the asbestos problem in some installations. So these kind of solutions that start to become more mainstream, we start to invest or lend money to those as well. It was the same thing, for example, for EV chargers, that we wouldn't see them 3 years ago, and now it's regular that someone who installs a self-consumption unit will probably also ask to install one or two EV chargers. And batteries. I think for the next 5 years, batteries will become cheaper, and therefore they will become a standard part of energy community, or an energy system at least, as well as electrification. I think with more and more cheap solar energy in the grids, I believe there will be a push for electrification of consumption, especially we're talking about heat pumps at domestic and also industrial level when relevant for that. Um, Other projects, we hear about hydrogen, we hear about some other technologies, but I'm yet to see, a very specific replicable solution that would be ready for our investors. Some last note on this, what we've seen, which is very interesting, is for, let's say, small businesses, mostly hotels, small hotels, we've seen very relevant applications of geothermal heat pumps, which is interesting. It's a next step. It's a very efficient heat pump with an added item of a geothermal hole. It adds a bit on the cost, but it improves efficiency on up to 50%. So we've already financed one of those in a small hotel in the Douro River, and it was really interesting.
Cool. Are there major changes that you have to do to the model if you like? So I guess you've done a lot of communities or solar installations, but if it's something like a heat pump or geothermal or batteries or things like this, are there major changes you do? I assume the interest rate and these kinds of things will change, but how else do you manage these different types of projects when you're incorporating them into how you do lending?
Yeah, what's important in all these issues is the maturity of the loans. It needs to be aligned with the financial um, plan of the project. So if it's an improvement, so for example, you are an SME and you're gonna install solar panels to produce a part of your own energy. We try that the savings on your electricity bill that you get every month needs to sustain the payment of the loan. And that's where maturities need to be adjusted to that. That's the first one. And that's why we aim to put projects that can be 4, 6, 8, 10 years if needed for battery systems, for example, or if you add a roof um, and you need a new insulation on the roof, then a PV payback can go from 4 to 7 years, and we just need to increase that maturity so that can be sustainable. If we're talking about a new installation, so a new building that has no savings, then it's more about standard depreciation rules, which could be 4, 5, 6 years. And that's basically looking at the accounting of the projects and see, can this business sustain to pay the loan they have requested? Those are the major changes we do.
Cool. Okay. And which countries are you guys active in?
So we have a mandate to operate European wide, and we also can do direct lending outside of Europe. What we've been looking at is, okay, we have very strong activity in Portugal, Spain. We've done a bit of Italy as well, Ireland, and some projects that show up around Europe. We would love to do something also in France, for example. But otherwise, in terms of big impacts and finding big tickets meaning loans with a lot of volume that we can provide to our investors, Mexico, Colombia, and Brazil are also three countries that are very promising in terms of energy investments. And also Sub-Saharan Africa, we've seen Kenya, Tanzania, Uganda, where a lot of investments are being done which are they in one hand they can provide good returns on the investors because you're paying a premium on the extra risk, of course. If we're funding installations in Mexico, you're not going to receive 6 or 5%, you're going to receive 10, 9%. But at the same time, looking again for that angle I've mentioned, which is find the solid projects, for example, the ones that have state warranties, grid warranties, so that we know that they won't just bankrupt and leave everyone with their money on their hands, you know.
That makes sense. Maybe another question about supporting projects in like underdeveloped countries. Are there other things you would do in these cases to avoid risk or mitigate risk? And how do you deal with currency in currency hedge risk hedging?
Yep. So we don't address, going directly to your second question, in terms of currency hedging, we don't address it. We expect the promoter to have that in place and part of their business plan. So when they approach us, they have to present us with a solution that accommodates currency fluctuations. Otherwise, we have two ways. One is we can demand that that company opens a subsidiary in Europe, and then we fund the European subsidiary. So we're effectively lending in euros. And otherwise, if we lend directly to the country, we need to see in place in the business plan the enough margin to sustain, unexpected fluctuations. Yeah, those are the ways we address this. As of warranties, and you were saying, especially not as much for South America, but for Sub-Saharan Africa, what we do is we try to piggyback on projects which have already been diligenced by international organizations that are also supporting them. So it's very easy to find some projects that have been pre-vetted by the IMF or the World Bank or Norwegian funds of development, things like that. And then we try to co-invest into those projects. That's actually a work that has its own team here in the company to try and open these markets in Kenya and Tanzania. And sometimes, but we will try to, as I mentioned, find some other counterpart, usually state or international agency, that will vet for that project, therefore giving it more security and more stability.
Okay. Regarding project funding, you mentioned that you reject 90% of projects. So is that just because they haven't done the, I don't know, due diligence, or there's not a good business case? Is there like a kind of common reason that you reject projects, or is there a piece of advice you'd give to somebody who wanted to get a project approved, or is it just, I don't know, proper due diligence?
Let's say of these 90% that we reject, I would say half of them are we are a platform with an open door online, so anyone can basically come and ask for. So we get a lot of, let's call them naive projects, people who have some ideas but they cannot provide solid documentation of what their projects are going to be. Or also we try not to invest in projects which haven't already been deployed. So I want to open a bakery, or I want to open a gym, things like that. We're not going to fund those. Those people should look for equity, not for debt. But when we talk about solar projects, that's different because they have their own metrics. And in that sense, as long as the technical aspects are clear, we are very much available to fund, if not the whole thing, which many times we do, 100% funding on the equipment. Many times we do 80% funding on those projects. So that's basically looking at that as a main trigger. Yeah.
Okay. What are your long-term goals for Goparity? Like, what do you want to? What's your, I don't know, 5-year plan, or where are you guys trying to get?
So let's say we clearly notice that we can increase our investor base a lot, let's say tenfold. We have 47,000 users. We could perfectly have 500,000 users in 5 years. That would be a first. And that means two things. One is small projects, let's call them under 100,000 euros, with such a user base, even smaller than that, even if we just double the number, if we go 100,000 users, any project around 100,000 euros or less will be funded automatically. So that for us would mean no sustainable project gets unfunded. And we can become really the enablers of these smaller communities, projects, energy, etc. So that would be, let's say, on our mission of access to finance, to say if your bank doesn't understand your project and it's worthy, will fund it automatically, fast, and in a simplified manner. And then we look at the big funds. So with a regulatory cap on 5 million euros, we can say, look, we want citizens to be part of the major solar projects and the major wind projects. So Portugal is not there yet, but in Spain, for example, it's mandatory that 20% of capital of any large-scale solar or wind project needs to be open to citizen investment or ownership. It's and we want to see that in Portugal as well. In the Netherlands, in certain regions, it's 50% of new projects need to be citizen-owned or invested. And that's where our 5 million euro cap comes, is I would really like to see a wind and a large solar project in Portugal have 5 million euros offer to citizens, because we see these large solars and these large wind projects, and many times we think, well, they're, and it's true, the 90% of the wind projects in Portugal are owned by 4 companies. So we would like to see a percentage of these projects being given to citizen investment, and that's a way to bring citizens on board of this very sustainable projects, but they will also bring wealth to local citizens. And the final thing we see, I call them crowd bonds, meaning, if you understand, large companies can go to banks and request bond issuing, right? We're talking about, we can see the last ones, Greenvolt, EDP, Martifair, TAP, Benfica, Porto, big institutions, they can call for 25 million euro bonds, 50 million euro bonds. What we want to give to mid-cap companies, medium companies, would be, let's do crowd bonds. Let's just do 5 million euros. And they will operate like normal bonds, annual payments, semestral payments, things like that. But let's give it to the citizens directly. And the way to implement this is that we can be much more cost efficient in these operations than banks. So we're effectively providing a new solution of funding, long-term funding for companies, and they don't need to be Portuguese, they can be European, on this notion that you don't need to be a large company to get bonds and to finance yourself for stronger operations. You can get 5 million every year in a crowd lending platform such as Goparity.
That's fascinating. I wasn't aware of these requirements for projects in Spain or Netherlands, like you said, to have a really big percentage of the participation to be kind of, citizen. Really, really interesting. And I think that that goes back to the importance of partnering with companies like Cleanwatts, where it's really about the community. It's really about these types of projects that are we're able to have them funded by people, but also people are participating in them and benefiting from them in multiple ways. Like, of course, it's great to get a return on investment, but it's also great to get cheap solar energy. It's also great to get, I don't know, access to batteries and electrification and things like this. It's I'm super grateful to be in this industry where let's say where I'm able to make money, but I'm also able to really push forward the types of technologies that are necessary in order to combat climate change. And one of our focuses now is how do we engage people in terms of energy communities? It's not just switching from, okay, I have a relationship with, I don't know, my energy company, to all of a sudden I have a relationship with Cleanwatts, but basically it's the same. It's just some of my energy is solar, but whatever. But how do we engage people with app or other things like this to kind of benefit a little bit more from it? So my question for you is, how do you work in ways, I don't know, with your app or other things like this to more engage investors, long term? Is it just a matter of whatever, here's my 100, whatever, 1,000 euros, whatever it is, 7 years, I'm getting a return on investment, and that's it? Comes, is there other ways to engage lenders?
Yeah, for sure. Thanks, Aaron. That's very a pertinent question. We are trying to expand our portfolio because crowd lending has a certain risk. We are doing peer to peer, so in that sense, it is vulnerable to the potential hiccups of economy. So at the same time, what we're actually trying to do, and this we expect to do as soon as possible, is ETFs. So we are integrating ETFs with our platform from another provider, and this has been a work in progress for the past 2 years because we want to make sure, well, not to go into technical details, but European Union has launched a taxonomy, so meaning very strict classifications of investment products, which are the only way to make sure that when you say you have a green product, a sustainable product of financing, that they are actually that sustainable and not just greenwashing or something like that. So we've been working in the last 2 years to find an ETF provider who can uh, abide by the European taxonomy and demonstrate without any doubts that their products are funding sustainable projects. And we are on a brink of being able to launch that. So hopefully, as we advance towards a more finance app and not just crowd lending, we bring this curation of products that we are sure that they can be sustainable, because as a brand we have our values and our community identifies itself with those values. So we want to make sure that all the products that we can provide to the platform are in line with such values of sustainability. And in that sense, yes, we have found the right ETF provider, and we are now working on the integration of the offer, so that our users can, in the near future, in the next few months, be able to expand their portfolio and move on to those projects on those products as well.
That's super cool. I have my bachelor's degree is in finance, and over time I have really stopped trying to time the market, to a certain extent, really stopped stock picking, just because everything's priced in, let's say. And I've heard, I think, I don't know who said it, but maybe Ray Dalio, but basically, proper, being able to do that is basically, it's possible, but it's like, winning the Olympics. It's really, really, really difficult. So, I'm just moving my own personal investing towards ETFs, just because it's like, easy way to make money long term, if done right. So I don't know, shut up and take my money. That sounds like a very, very interesting product. I'm for sure going to be interested in that, knowing what I know about the renewable energy and the growth for it, and also the relative let's say, lack of risk, because you're funding assets that are real assets. And it's doesn't it's not very risky from my perspective, and obviously your success has shown that to be true. Cool. With that said, I want to maybe open up the chat to the questions that we mentioned. So let's see. I'll just go through them. I have one for myself, so maybe I'll mention this. Is Cleanwatts business model based purely on behind the meter collective consumption, or do you explore trading between buildings, users, storage services? Um, so yeah, basically, for sure. I just wrote on LinkedIn this morning an article about like virtual renewable energy communities. So the idea is that you have a single community as a kind of almost like virtual battery. So really doing on a community level, managing the energy between all the users, kind of behind the meter, but in this case, it would be it would be before the meter. But uh, basically, treating this community as a kind of virtual battery and then combining it with different communities across the grid is something we're working on. And we have some projects, for example, in Sweden, where we're going to do really, not just an energy community where it's shared solar, but really smart asset control, batteries, EVs, and as you mentioned before, heat pumps, HVAC systems, in a really smart way. And this is the direction the company's going. And yeah, it's also moving towards spot market energy tariffs, because they're available in Portugal. And really, if you're able to have, let's call it dispatchable assets, you can save users a lot more money. I see a hand up. Maybe I can jump to your question too, Ivan. Let me see if I can unmute you, or probably Ivan. Sorry if I screwed up your name. Um, is it? I think I tried to unmute you. Yeah. Okay. Go.
uh, Depending on
Can you
where
speak up a
where
little bit? Repeat. Just I can hear
can,
you, but
can
just
you
it's
can you
better.
hear me well?
Yep.
No?
Yes. Good.
Yeah, okay. Yeah, it's perfectly fine the way you pronounced it. So in Portugal we pronounce in different way, but it's perfectly fine. I identify that. So thank you very much. Thank you very much for your both presentations. Hi to Manuel. How are you doing?
Ivan.
Seen for a while. And yeah, I always find interesting this model in terms of expanding at a small scale, where it's completely or almost impossible to get finance for that. And this represents obviously a major obstacle for a lot of people that is willing to have their own systems, but where they cannot afford for that. And yes, it's truly the way to implement at this level. And when we speak and when we talk about the transition targets, which are very tight, very ambitious, we have to consider these small scale systems that they will make the difference, because it's an immense market. And the question I would like to make is regards with the ownership, and probably I missed there, and with the risk. So if someone invests, a citizen invests in a particular system, is he lending the money to the beneficiary, or to Goparity, or to Cleanwatts, who with the relation with? Uh,
Yeah, I can take this one. So basically, we have two things here. When we look at the project from Cleanwatts, if you invest on a 100 Aldeias project, for example, you are lending to Cleanwatts, which is the promoter who has the assets and manages the energy community. Other projects that we might have on our platform, you will always lend to the owner of the assets. So Goparity is just a mediator. We receive your money, pass it to the owner, and then we sign a peer-to-peer contract between you and the owner of the panels. So they are the owners, but in this contract of loan, the panels are a warranty. So in case of default, we as Goparity will act on behalf of all the investors, hire a lawyer, get the assets back, sell them, and give you the money that we get, in case of credit failure. Otherwise, it's the promoter who owns the assets, or the energy community, or the association, etc. I think that's it, Aaron. Right.
Cool. Okay. I see a question. It looks like it's to you, but I can maybe answer and then pass it to you if you have more to add. So, what particular policy or market barriers are currently limiting your project's revenue streams? So I'll focus on energy communities, like basically. So number one, one of the challenges, Portugal was one of the first countries to adopt energy community legislation, but and I would argue a pretty good energy community legislation, but then the actual permitting side of it has actually been pretty slow. And so it's been difficult to get communities permitted for one reason or another. For sure, part of it's the risk of, after the war in Ukraine, as you mentioned, a lot of solar projects came onto the grid, which can, of course, create instability because solar is variable depending on weather. Um, of course, the core competency of Cleanwatts is trying to actually balance those and do things intelligently, um, to kind of prevent these kinds of overflows. But it's still very complex, and it's maybe hard to explain that idea of self-balancing energy communities to regulators. And then in addition, I would say in Portugal, in some countries, especially Scandinavia, Germany now, and like Central Europe, there is the ability to basically get money from helping balance the grid, ancillary services, demand response. And this type of business case is still kind of difficult for us to now offer. So really these types of grid balancing or congestion avoiding is the kind of money that we know is should be available to energy communities, but it's still really challenging to access those, at least in our markets. What ended up happening is some countries, like I mentioned, Germany or Sweden, for example, they have really good, ancillary services markets, but they don't have really good energy community legislation. Whereas Portugal, Spain, for example, we have the opposite. We have good energy community legislation, but not good, grid balancing. So I'm really looking forward to, in the not too distant future, hopefully, the ability to have, combine these technologies together and basically be able to, better fund people to have home storage batteries and have, EVs and these kinds of things helping balance the grid. I don't know, any other limits or things like this that have made it hard for you to get projects revenue?
Well, it's really about looking at the business models and see you either can we can look at an example like, let's say, for example, condominiums, that I think it's a largely untapped market which we actually cannot much go to because we demand certified accounting to do our risk analysis, and most, let's say 95% of Portuguese condominiums don't have certified accounting. That said, um, even if we're talking about collective self-consumption, what we can see is, of course, there's some consumption at the local level of the condominium, elevators, lights, all that. But then the surplus will be divided by the tenants, by the owners of the houses. So there is not a clear revenue here, but that can be defined by how much every month the condominium members can have to pay. They'll have the savings, not the condominium, but then they contribute um, proportional to those savings every month to pay the loan that the condominium has received. That's a way to match revenues and debt service. So that's one way. We just need to see who's getting the benefits and how can they pay them back. And in these kind of energy community logic, you would, if you're getting an individual benefit, you just have to pay or a small fee to the community to compensate for the savings you're having. And this, when it's distributed by many people, it tends to be a very symbolic value. You could be talking about 10, 20 euros a month, maybe less. But that would already include the energy you're getting for free from the community. And all those small amounts added together will pay the loan that the community has hired from a platform or a loan provider.
Cool. Maybe one last question. It's almost at the hour. Um, I see. I understand the large cost of P2P lending is marketing and comms required. So maybe just from my curiosity, what percentage of your, how much of that is, in your budget, and how much of that is affecting the return, and how do you plan to overcome it, or how do you scale it
Yeah,
effectively?
well, it is true. Marketing and communications is a heavy thing, but at the same time, there's a very large difference, very big difference between crowd lending and crowdfunding. When we're talking about crowdfunding, where we're looking for equity, every deal is a new sale. You have to convince investors that they want to put their money on their equity. So that's a nightmare for communications. When we talk about projects, and Cleanwatts is a perfect example, we've done 15 communities. So every time we open a project in our platform, it will be, Cleanwatts energy communities 1, 2, 3, 4, 5, 15, 20. People know the brand, they know and they learn and they remember. So the effort of doing second and third and fourth campaigns, it's ever more soft because the investor is already predisposed to invest in something that they have seen, that probably has started paying before, paying back some of the capital, and therefore those costs become marginal. At the same time, we have a percentage of our community works with auto investment. They say they define the kind of projects they want to invest. We are always improving this kind of metrics. For example, nowadays you can only choose maturity, risk level, and maturity and risk level, and the amount eventually. In the future, you could choose, for example, Portuguese projects, solar projects, more thematic kinds of things. And people activate this and they just leave their money to invest for itself. So actually what we see is a lot of projects when they enter the platform, they get already a certain amount of auto investment. And more as the platform grows, people joining auto investment is the way to make this scalable, because you will always ensure that the percentage of the investment is there. And also we see every time we do an email campaign, we get a lot of loans invested. So it's pretty straightforward from our side. And just now being able to break our last milestone. So our previous largest project was €500,000. Now we are on our way to 800,000 in a single ticket. It just shows that the community is very engaged with the projects.
Awesome. All right, so that's our time. So I suppose we'll end now, but really pleasure, Manuel, talking to you. Super interesting stuff. Looking forward to scaling up to some more big ticket projects with you in the future. And thanks very much for everybody who joined as well. Have a great day, and yeah, talk to
Thank
you
you.
later.
Thank
Bye
you
bye.
for all. Just